Hello, my name is Maria Bezubova and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz! Today is September 30, 2024, and it is a weekly markets update. Let's have a look at the news of week 39 and see what are the next trends. Also, please check out my interview with Sebastian Duva, lead of Africa Fertilizer Program at IFDC, that was published last week. Sebastian shared his view upon fertilizers market perspectives in African countries, as well as challenges on the development pace. The immense potential of African agriculture needs to be unlocked, and fertilizers are an important part of this puzzle. Please let me know in the comments which questions related to the fertilizers market in Africa you're interested to uncover, and I will gladly discuss them with Sebastian. Urea prices continue firming amid Indian tender announcement last week, and there is no sign that the market will reverse soon. Producers from key supplying countries are very certain regarding sales in October and first half of November. However, buyers still have to digest and accept the new price level. At the same time, the pace of price development for end of Q4 and Q1 next year will be dependent on the amount of the volume finally booked by India. Domestic sales in India are strong due to healthy monsoon, with stocks being at the lowest level since 2020. Increased production versus a year ago doesn't cover strong demand, so market sources indicate that even one more purchase tender might take place in Q4. Anyway, end of this week we will watch the results of current tender and see where the market heads after that. Middle East FOB prices climbed by almost $10 to 350 to 55, because the supply is obviously tightening. Most of suppliers sold out their October spot volumes. In Iran, price increased to $295-98 FOB. About 55,000 tons were sold last week at this level. Egyptian suppliers are targeting as high as $375 FOB now, same as Algerian producers. But there were no confirmed deals at this level. Egyptian NCIC sold 10,000 tons at $370 FOB for October loading for undisclosed destination. Southeastern and South Africa are approaching nitrogen season, so the purchases there will be active in October. However, logistics is limiting purchase window because delay in the ports is between 30 to 40 days, and product still needs to reach inland farmers. In the interview with Sebastian, we discussed the new strategy that is being developed for producing African countries to effectively move their product inland to the importing African countries. So the demand is met more by domestic product rather than long-haul international imports. But of course, for now it is only a plan, while next season will be covered by the usual international suppliers. Southeast Asia producers from Indonesia and Brunei also increased their FOB targets to around $360. Prices for imports to South American markets increased by at least $10, but demand was very sluggish this week. CFR Brazil climbed to $370, CFR Argentina to $390. Same for CFR Mexico. But buyers were mostly quiet, and such high levels were not confirmed on the buying side. Imports demand is expected to be active in October, with rainfalls coming to all markets, progressing farmers' activities. US market was inactive this week, with minimal trade ahead of the Indian tender results. Paper values stabilized. The ranges narrowed down versus a week ago, but in general there is expectation that November and December values will be lower compared to October, due to easing of supply after shipments to both Indian tenders. Egypt FOB average for October increased a bit and reached $370, while for November and December fluctuates around $360. NOLA FOB remained unchanged at $318 per short ton. Arab Gulf FOB firmed for November to $355 average. Brazil CFR also climbed both for October and November to $365 and $360 respectively. Ammonium sulfate market prices are stable to softening. Price for standard product in China slipped marginally to $140 to $45 FOB due to slow demand in Brazil. Due to hot weather, Brazilian farmers have a wider purchase window, which kept them away from the market during last week, in a hope that nitrogen prices will drop further in the season. However, this strategy might not work because of the effect of the second Indian tender. Demand in Europe exists now only in the segment of compactors, while agricultural buyers will wait more to purchase closer to the season. The Chinese product is dominating the market compared to higher-priced European product. Nitrates demand is still almost muted, with refill purchases being significantly lower versus previous years. UAN purchases in the US picked up a bit due to modestly increasing corn prices. However, still are much lower versus average of past years. NOLA UAN price is stable at $203 to $207 per short ton. In other countries, there was no demand registered last week. Ammonia prices increase across the globe due to continuing supply tightening. Yara agreed with Mosaic October price in Tampa, which again climbed by $30 to $560 CFR. Respectively, European price also increased to $610 CFR. East of Suez, the situation with supply hasn't changed. Indian demand is still robust, thus the price is being pushed up. Most likely this bullish trend will prevail at least until Martin comes out of its maintenance, and hopefully there will be no more outages from key producing regions. In phosphates, active demand in India again pushes prices up. During past week, India bought about 170,000 tons in total at $637 CFR for 2 lots of Chinese and Egyptian origin, and at $640 CFR for 2 lots of Saudi and Moroccan origin. On top of that, Herl issued another tender for a total of 40,000 tons of DAP to be supplied end October, beginning of November. Indian DAP stocks are estimated at the level of 1.5 million tons, which is very, very low level compared to previous years. This happens because imports dropped by half versus a year ago, while domestic consumption increase cannot compensate the difference. As discussed last week, renewed level of subsidy doesn't cover losses of the importers. But market sources indicate that Indian government decided to absorb all losses that happen between September 1st to March 31. Bangladeshi government informed that the tender for 120,000 tons was awarded, but no exact details are available yet. At the same time, Ethiopian tender that attracted proposal of 60,000 tons of Saudi product seems to be scrapped. Most likely, new tender will emerge instead of this one. In general, demand in Southeast and South Africa is quite robust, with several import deals in discussions for both DAP and MAP. CFR price level also climbed in line with the international trend to $635 to $40. Moroccan OCP sold 14,000 tons of DAP at $610 to $25 FOB, and also 30,000 tons of MAP at same price level. MAP was sold primarily to Brazil, where prices are steady at $635 to $40 CFR, with sluggish import demand. China is mostly quiet on DAP. Producers are anticipating exports from October. Starting October 1st, there is expectation to get custom clearance. Offers are at $610 to $20 FOB. In the US, there were multiple barges traded at NOLA, DAP at $555 FOB per short ton for September loading, MAP at $610 FOB, and TSP at $490. However, weather phenomena might influence phosphate production and tighten supply for upcoming months, and the US market is already quite short. For example, Mosaic reduced its third quarter production volume by at least 80,000 tons as a result of Francine hurricane. And at the end of the week, Helene hurricane hit Florida, where in Tampa Bay area 3 more phosphate facilities of Mosaic are located and might be influenced. Another one phosphate facility of Nutrien is getting ready to emergencies. Let's hope that production facilities will not suffer and go out of operations, but port loading operations will definitely be affected, so phosphates exports will be delaying. Moving to the fundamentals. European natural gas futures rebounded to 38.6 euros per megawatt hour during past week. This short-term bullish trend is connected to the cooler weather expected this week in Europe that will increase demand for heating. Flows through the Britain-Netherlands gas pipeline resumed after maintenance, and Russian supplies via Ukraine remained stable, while supply from Algeria to Spain is still lagging behind last year's figures after maintenance at 2 gas pipelines in September. European gas storage is 94% full, though storage injections have slowed due to weaker LNG imports, as US LNG cargoes head to Asia for better profits. US natural gas futures surged nearly 5% to $2.9 per MMBTU, the highest in 3 months, as Hurricane Helene hit Florida, prompting Gulf of Mexico producers to cut output by 20%. And leaving millions without power across Florida, Georgia, and the Carolinas. Prices were further supported by strong gas flows to LNG export plant in Louisiana, nearing mid-August highs of 35 million cubic feet per day. Despite the storm's impact on power, the LNG plants remain unaffected, keeping demand robust. Also, the majority of US output from inland shale basins remains secure. Agricultural commodities future prices were mostly in green. Wheat futures were traded around $5.8 per bushel on Friday, higher than a week ago, driven by supply risks and robust demand. There are a number of factors supporting bullish price trend, such as drought in Brazil, disappointing crop outlooks in Europe and Australia, which revised its 24-25 supply outlook by more than 500,000 tons last week due to lack of spring rainfalls. Also, there are concerns over poor harvests due to dry conditions in the US plains and parts of the Black Sea region. Additionally, war in Ukraine exacerbates supply concerns, impacting wheat sowing and export forecasts. Meanwhile, Russian wheat export prices have edged higher as shipments declined, reflecting tightening supply and leaving the market sensitive to both weather and geopolitical developments. Corn futures climbed above $4.1 per bushel, reaching a 2-month high on concerns regarding realism of latest USDA projections and improving demand. While the USDA reported at an unexpectedly high national average yield of over 183 bushels per acre, lower yield projections in key states like Illinois, Minnesota, Ohio, and Wisconsin have cast doubt on this optimistic outlook. Additionally, Ukraine's crop size remains uncertain due to prolonged hot and dry weather, with many considering the USDA's current production estimate of 27.2 million tons to be overstated. On the demand side, US corn exports hit a 5-year high over the latest 4-week period, further supporting upward price pressure. Soybean prices rose to $10.5 per bushel, marking an 8-week high, driven again by supply risks and robust demand. Supply concerns stemmed from uncertainty around Brazilian planting conditions due to drought, lower than expected planting progress, and fears of shrinking US harvests due to adverse weather. On the demand side, strong export sales and increased demand from China, which has been stockpiling in anticipation of geopolitical developments, added upward pressure. Last week, China's central bank has cut interest rates in an attempt to revive flagging economic growth, and Chinese soybean crush margins made a sharp rebound after that. Thus, there is a hope that Chinese demand further in Q4 will be robust. Moving to the shipping industry. Containerized freight index continues its downward rally. It lost almost 10% over last week. The largest loss was again on the route between Shanghai and Rotterdam, while containers cost from US to Europe even increased. Market experts anticipate a continued decline in rates for Asia to Europe routes due to weaker demand. Meanwhile, rates for transatlantic and trans-Pacific trade routes are expected to rise, driven by potential labor strikes in the US ports and the impact of China's Golden Week holiday that starts this week. The Baltic Exchange Rye Index climbed more than 5% this week, notching its best performance since early September, propelled by the bigger size segment. The capesize index jumped more than 3% to a new high since early July, driven largely by robust activity in the North Atlantic region. Meanwhile, the Panamax index dropped by 3.5%. There was limited action in the Atlantic in the south, whilst the north of the region fared marginally better, but insufficient to prevent the slow drifting of rates. The Supramax index also marginally eased, as it was a lackluster week from an Atlantic perspective, with little excitement and rates generally losing ground, and fresh demand remained weak from key areas. In Handysize segment, the market saw a mixed performance, with slight movements across both basins. Both the continent and Mediterranean regions continued their positive momentum, but in contrast, the South Atlantic faced ongoing challenges with a lack of fresh inquiries and minimal activity. The US Gulf market also remained subdued, showing signs of weakening support. There is some development related to the potential strike in the US ports that is supposed to start in coming days. Thousands of dock workers at major East and Gulf Coast ports are preparing to strike, which could disrupt the flow of about half of all goods shipped in out of the US. A strike would affect 14 key ports. Experts warn that even a brief strike could take days or weeks to recover from, and the US economy could lose up to $5 billion a day. The union is demanding higher wages and abandon port automation to protect jobs. East Coast dock workers earn significantly less than their West Coast counterparts, who recently secured a pay rise. The strikers want a 77% wage hike to counter inflation, but the officials have offered a lesser increase. So let's watch the development this week. To sum up, urea price stabilized at higher level with all eyes on India that will close the tender later this week. The results will show the direction for the market in Q4, but it is already clear that outlook is rather bullish. Ammonia price climbs further with new Tampa deal for October secured at price $30 higher versus last month. DAP demand from India continues to be robust, supporting swift price increase, and at the same time more product will be needed there as stocks are critically low. Natural gas prices increase amid arrival of cooler weather and effect of production cut in the US because of hurricanes. Agricultural commodities futures prices are all in green, that hopefully will support fertilizers purchases in key markets in upcoming months. So, let's see what is next around the corner, but it will be already next week. Thank you for watching. Please subscribe to the channel, put like to this video, push the bell in order not to miss any updates, and see you soon.